Let's turn back to the major averages, though. Joining us now, Doug Flynn, co-founder of Flynn Capital Management. Doug, welcome to the show. Volatility has become the new constant on Wall Street, as you well know. Why did the major indexes fall mostly into the red this afternoon?
I think it's just more of the same. It's the uncertainty. The market hates uncertainty, and people just don't have clarity yet on which way are we going to come out of this. And so there's the weighing of what the Fed's going to do this week. That's imminent. So, that's out there. And then, of course, you have the ongoing Ukraine war situation. So until you get a little bit more clarity, it makes a lot of sense that we're just going to bounce around in and around here. You've got the market overall down more than 10%, and you've got the NASDAQ in bear market territory. Went a little further into that today. So those are some of the things weighing on everybody.
A moment ago, we were talking about the tech stocks hit hard by China's latest COVID-19 outbreak. Let's talk about Apple. How significant is it for that company who relies on China for such a significant portion of its production? Do you think this is a long-term issue moving forward, Doug?
I would call it more of a midterm issue for them, really. It's obviously they're going to figure out a way to keep the train rolling with what it is that they do. And I often say a lot, the Apple doesn't care who the president is or what is going on at any particular moment. They're going to keep their supply chain going. They're going to be ready for the next iPhone rollout in the fall, and they're going to keep things going. I think it can be somewhat cumbersome, just like the supply chain disruptions that have happened recently, but they've still been able to execute. So I think this is more of a backdrop of everything else and waiting to see if they can yet again pull through. The stock is off significantly, but relative to the rest of the tech sector, almost nothing relative to the rest of it. So they are holding, I think, up better. And I think in the long run, they'll come through like they have in the past, no question.
This week, all about the Fed. As you well know, when the central bank will announce its latest policy decision on Wednesday, what will you be focusing on closely?
So the markets have already priced in 1/4 point. In fact, the markets are really pricing in 1/4 point raise at every single Fed meeting for this entire year, which puts us at basically where we're at 0 right now on the Fed funds rate to probably 2% or more early next year. So that's significant. The big question is, will they just do 1/4 and will they do 50 basis points or 0.5%? And so there's that. Will they sort of get ahead of it? I'm not sure the Fed's going to go too crazy here, but there's a lot of, they're really boxed in a corner. They can't really perhaps raise too much if we've got all this pressure from inflation in the near term and the war, but they do recognize they have to raise. And they will raise. So the question is it 1/4 or 1/2? So we're looking at that. But generally, I think the 1/4 of a point is sort of priced in. So it's a non-event if that's what you get, and maybe even a little bit of a relief because we kind of knew what we were expecting and it happened. So that's where we see it right now.
Another challenge for the Fed is how it's going to handle the rising price of commodities. We've been seeing this all month. Today, I paid $5.30 for a gallon of gas, Doug. That's all I'm going to say. I know. Yeah. What resources does the Fed have to rein in the rapidly increasing prices that we're seeing just about everywhere?
That's really the problem. And, what happens here in the U.S. is, when you think about the price of gas, as you mentioned, if you're in the top 10% of wage earners, you only spend about 2% of your income on gas. If you're in the bottom 10%, you're spending 11%. And so even outside of the U.S., if you think about it, look at emerging markets, they're probably going to get hit harder by this from the standpoint of 70% of people in the emerging markets spend their income on necessities. So when you have an increase in fuel like that, it goes directly into raising the necessities and leaving them very little. Here back home, obviously, it's going to put a crimp on everybody's monthly amount they have left over. We got used to having a little bit of extra money maybe, and now that's being completely wiped out. The Fed doesn't have too many tools in its toolbox. All they can do is really raise, and how much they raise and how fast they raise interest rates we're talking about. Other than that, there's not a heck of a lot they can do. But then for the positive of that, to keep inflation down, the negative to that is then interest rates go up. So what you're spending on your loans theoretically down the road will start to creep up in terms of what you're paying in interest.
One thing that you said that was really interesting when it comes to rising commodity and gas prices is that it is impacting lower income Americans more. What kind of problem does that present for the economy, Doug?
Yeah, look, the people with their spending money, I don't know if you're in the top 10%, how much this really moves the needle for you if you're going to not do something. But realistically, if you're in the lower part of the income spectrum, what happens is you have to start making decisions. You know, you're going to decide, do I fill up or not? Do I, go out or not? Do I spend what I was spending? So now you get a situation where now you might have an increase, in your spending, and you can't now you spend on anything else that you might want to spend on. And therein lies the problem with GDP. The higher oil prices go, it does have an impact on GDP. And sort of quick math is if oil prices are up $50 a barrel more than they were, that can knock 0.5% off of GDP. That is huge in terms of what it's going to do to the overall economy and slowing it down. And look, the Fed has a problem with inflation. They can blame Putin to an extent, and I'm going to put that at 2% of the overall inflation is Putin's problem. The other 6 to 7%, which is what you're going to see as we get to 8 or 9% inflation, has nothing to do with that. It has to do with the government spending, the massive amount of money that they put out in there. And if you look up economics and look at what causes inflation, it's the massive amount of money that's out there chasing fewer goods. And that's what's going to drive inflation. So you have all this going on, and the Fed really has some issues. So we're going to see what happens this week, and then all of the rest of the meetings that they have for the rest of the year.
Given all the moving parts here, what are the smartest investments to make right now, in your opinion? Are you leaning more towards value stocks or growth stocks, investing in smaller companies or larger companies?
Excellent. So we've been talking about for a while on the show about how we liked utilities and value, and those have absolutely been some of the better places to be. Value has actually outperformed growth for the first time in a while by a large margin. Utilities just has to be up there with like consumer staples and things that people don't not buy, like toilet paper and things. All those things are going to continue on. But so you look at that and you look at energy. Obviously, that's a play. It might be a little bit already played. So I don't know if you want to chase that. But some of those areas I think are still good. The areas of risk and concern are obviously the ones that are down the most, like discretionary, technology, those things. Now, therein lies opportunity. Some of those tech stocks and some of those other areas, even though the NASDAQ is down over 20%, some of those individual names in there are down 40 or 50% or more. So that's what you do. You look for, bargains in companies that you liked at a certain price, and now why wouldn't you like them even more now, assuming they have purchasing power, ability to raise their pricing power. If they have the pricing power to raise their prices, then they can continue to do well.
Doug Flynn, co-founder of Flynn Capital Management. Thank you so much for being on, Doug. We hope to see you back soon.